One.
Sometimes your overall analysis of the market can be correct. Like closing over 5,500. I thought that would be really good for the market, the way we rallied. The problem was I didn't see it going to 5,400 first. What a turnaround. We will talk about that at the top of the show. We're going to talk about some stocks in the M's. Micron getting the beats. Moderna getting the beats. CPI, and no, that was yesterday. PPI 830 on the nose. Jim Tassoni 835. Get ready, buckle up. It's going to be a wild Thursday here on PreMarket Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, picking up where we left off, up 12 and a quarter handles, 73.50 in an area of very limited resistance. You guys can see that on the upper right chart. The buck added a few pennies at 101.34. TLT down 26 cents at 100.35. Crude trying to get back up to 70, up 96 cents, 68.27. Gold up about $5, 25.47. Silver up 20 cents at 29.11. Bitcoin kind of quiet here. Bitcoin futures up $475 at 58,335. Let's bring in Triple D. I mean, what a historic day yesterday in the markets. Besides COVID and wild times, financial crisis, I mean, 160 point rally in the S&Ps. Holy mackerel.
Incredible. I mean, that reversal was one of the most wicked reversals that I've ever seen. And if you were short, you're probably like, okay, well, we're pulling up a little bit here. I'll just reload. I'll add to them here. Man, they caught some shorts and ripped their heads off yesterday because maybe Dan Rosenblum, I follow him, Shark Biotech on Twitter, maybe said it best. He said, I cannot remember a 3% reversal with the VIX below 25 in my career. And I'm like, that's such a good point, because during the financial crisis, we've seen these. During the COVID crisis, we've seen these. But VIX at like 18 or 17, and then we see, 1.5% sell-off followed by a 3% rally intraday on the S&P. I mean, those are big moves. So incredible volatility at 10:30, 10:45. It looked like everything was just collapsing. And then they turn around and the algos start buying, and they couldn't stop buying. They just kept their finger or their bots on the buy button there nonstop. AB, bring him in here too and get his assessment of trading action yesterday, because it was a horrible first hour and a half, and then they just could not stop buying.
Yeah, I mean, so I was looking at the different options toward the end of the day there, and there were certain SPY calls that at the low were selling for 1 cent that ended up in the, ended up going for like 250. I think it was the I think it was like the 552 calls or something, where it had a low on the day of 1 cent and then went up more than like 200 times their initial. So I was doing the math and I was like, if you would have bought $20 worth of these SPY calls at, say 11 a.m. by the end of the day, it would have been worth like $10,000. It was just outside of the standard deviation of moves by a lot, because I think intraday the SPY went up 2.5%.
It was honestly incredible. I don't even know. Again, I'm looking at the markets. I was actually on a call with Joel about 10:30. We were just talking. We're like, holy cow, we had to keep going back. Like, you see what this market is doing? It was just collapsing. Like, they were selling everything. We were down 0.5%. Then we're down 1%. Then we're down 1.5%. I'm like, what's going on? And then just like that, on basically a dime, they start buying. And then by like noon, we're like, oh, we got a lot of the losses back. And then by like 2 o'clock or by like 12:30, 1 o'clock, we're like, oh, we're green. And now it's like, no, now we're just going to continue to buy them all day. It was wicked. V bottom, man. You see them everywhere.
Yeah. Did the last like few minutes, did that almost feel like buy-ins, maybe on the S, because I was like, you usually get a pop into the close, and then, and it just, and I'm like, well, wait, no, that's another five. No, that's another 10. That's another 50. No, wait, that's 20 handles in like, like 3 minutes. It kind of felt like some people were just kind of holding on, and the margin clerks were like, oh, well, let me see. Nope, 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 nope. You're not going home short. Nope, nope. And then you get it, and you're getting follow through today. I'm looking at the S&P, Dennis, and you were talking about the V bottoms, and I'll give the nod to the SPY here, because the SPY came within 50 cents of the low on Friday. Well, I was looking at the S&P, and it got pretty darn close. But if you're out there at Friday's low, yeah, I mean, you got a big nothing done. So a little bit of, sometimes you just gotta just throw those orders out there a little bit ahead of where you think they may go to, but getting follow through today.
Yeah, and we have a couple stocks that are trading higher this morning. We have, let's start with an earnings stock. We'll start with Signet Jewelers, which reported earnings yesterday after the close, or actually, sorry, today before the open. Signet reported EPS of $1.25, which beat by 4 cents, revenue of $1.49 billion, which missed by 10 million. But then the guidance was good. They updated their sales outlook to 1.34 billion to 1.38 billion for Q3. That was above the estimates. They reaffirmed their outlook, and the stock is up now 12%, $10 this morning. So you got a couple stocks starting the day in the green again this morning.
And reports on the right day. I mean, how do you get a better day after that wicked rally? Now they're looking to buy stock. Same store sales down 3.4%. I'd argue if they were to report at 10 o'clock yesterday,
Yeah,
man, the stock could have ended up being down. But after that kind of a rally there, they're like hungry to buy stocks. Just before we go into the technicals on Cigna, I just wasn't quite done with the macro talk there either.
Yeah,
I
agree.
I want to bring it back. It was such a historic rally. It was really led by tech. You could kind of feel it in the pre-market, and we talked about it on PreMarket Prep. It's like you could feel tech wanted to go higher. And even during the sell-off, like even during the wicked sell-off, and it was a very wicked sell-off, NVIDIA was holding up pretty well. Like usually on these sell-offs, you've got, it's usually led by tech. But it wasn't the case. We could feel it in the pre-market. And even though the market was down, it felt like, stocks like Microsoft, NVIDIA, Amazon, were all feeling like they wanted to rally. And then, but the market brought them down a little bit. But then, once the market, started to turn higher, it was NVIDIA that led the charge. And
Yeah.
NVIDIA just had a fantastic day. Maybe getting to a point where the valuation was just starting to become more reasonable. When we start looking at a forward multiple under 30, you get near that $100. People miss it at 91 the first time. They start thinking about it again. And now they're really going to be thinking about it. Like now people think they missed it. Now people are going to be chasing it. And you know what? I usually say don't chase it, but I think there's so many people who maybe got caught on the wrong side of this yesterday. I feel like there could be some follow through here too. That's a very tricky tape to come into because naturally we've been chopping around a lot. So naturally you think, okay, yeah, we have a 150-point rally in 4 or 5 hours. It's time to take some profits. I'm not sure that's the case here though, because it was so wicked. I think there's some people caught on the wrong side of this thing, and I think you could actually get some follow through. So if I was long, I'm maybe holding on for a little bit here yet. And you're getting follow through today. Now, again, we get some economic data here at 8:30, so maybe the story changes. But as of right now at 8:09 in the morning, you're still looking like there's buyers out here.
Yeah, Dennis, I just said people are making some comments in the chat. I guess Jensen was speaking around that time, but I mean, I just have to give you some credit on that one. I mean, that we've been trading together, for 24, 25 years. I think that has to be like one of your best calls that like you've ever made.
But
And
it was
I know
tough. Like it wasn't like tech just went straight up and then it started rolling over. Like I felt like I wanted to buy tech stocks and in the pre-market and they did go up a bit, but then the hour and a half sell off, it's like, so end result ended up being a good call, but can you hold through the pain trade of 9:30 to 11? That's the question.
No. And I guess I was just looking at it, and you could say Jensen speaking. there was a bunch of carryover from the bank talk from all the banks are failing this morning. Oh, okay. That's new news. But I guess just these kind of things when you have an inkling on something and you're looking at it. I just looked at the NVIDIA and I was just curious, like how far it got below the close. And it did have the higher open. Your close on Tuesday was 108.10. It went to 107.42. I mean, considering how much the S&P sold off, how much the S&P was red, that was an incredible relative performance.
Yeah, it was.
So, the closing prices, I mean, there's so much noise in this market. There's 10 o'clock numbers. If you could just kind of, okay, if you're going to try and focus on one thing and one stock that you like, look at that closing price yesterday because you could have gotten it. Now, would I've ever imagined that it went to 117.19 off that? No, on huge volume. But I mean, I think that's about the only way that that you can catch those guys. Have some kind of, if you have a feeling, if you have a foundation of something, maybe look at the technicals. I mean, if you look at this chart here, it barely got in the range from Tuesday.
It was
Barely.
holding up. The relative strength was really good. Even though S&Ps was rolling over, the relative strength on Nvidia was really good. And it was that for a lot of stocks, like a lot of tech stocks. You could really feel tech holding up. And that's why I'm just going to say it again. I think, obviously after yesterday makes it easier, but I said it yesterday morning. I think we may end the year like we started the year with tech leading the way. Even though everybody thinks the IWM catch-up trade is coming, I just don't think investor mindset cares about those stocks. And it's hard to start caring about those stocks. You can say, well, if they start going up, then people start to care. But it's like, that's the problem. It's like, who's getting those stocks started? Who's coming into the small caps and saying, yeah, I'm selling NVIDIA and I'm buying all these small caps because this is the catch-up trade and this is going to happen. It's not what I'm seeing in any media. You don't see them talking about these stocks. You see them talking about AI. It's still AI. And to be honest, it's still story that drives market action. And the story is still there. That's why I think you got to be buying tech on pullbacks.
All right. Well,
Yeah, Signet. Let's go to Signet.
So AB gave us the numbers.
Yeah.
And they're pretty good numbers. What we were arguing when we went on the tangent back to the macros is that Signet, I don't know if it's up 13% if it reported 10 o'clock yesterday, but it's not 10 o'clock yesterday. It's the day after the most massive rally that we have seen in a very long time. It's a big move. Signet is known to make big moves on earnings.
It is.
So this is an earnings mover stock. I don't know what the expected move on is this, but it seems like it always moves $10. Last quarter, June, had awful numbers, fell, I think, $15 on the report. Now we're getting a lot of those losses back. Now, again, this isn't the kind of stock I'm going to chase, but the numbers, I guess, were okay.
The only thing I could think about this is potential resistance, and you popped over 90 in the pre-market, 90.09. Then it takes you all the way up here where my cursor is. There was these highs between 89 and just above 90. So, man, this thing was at 75 a couple days ago. You're back at 90. So I would hope that it would get up to that area, and see and get up to 90 and hold. What I'd really be wary of if you rally up, you go like to 90.75, and then you turn around and you come back down to that 90. Where to buy this thing, I have absolutely no idea. And I just want to check, did AAP rally yesterday or was that down again?
You did have a little bit of a rally.
It was up.
You can see one in there. Did it close green?
It closed green.
Barely.
I told
you. It closed green by 20 cents on the biggest rally, the most historic rally that we've seen. I feel like in years, intraday historic rally. AAP still managed to make a new lower low and a new lower high, but it did close green.
Yes.
So the streak of lower lows and lower highs remains intact, but it did close green. How'd Elf Beauty do? Oliver, look, Elf even closed green. It had to be a good market if Elf closes green. What about Celsius? Same story. Celsius, did that close green? Well, I don't even see it.
Yeah, 58
Did it
cents.
really?
Yeah.
Well, what about
Spinner? Even Intel was green. Kind of. If you call those green.
What about, we talked about it yesterday before the open, Dennis, that Tesla was kind of hanging out, even though a lot of the other quote unquote election stocks were selling off. But then as tech was rallying, Tesla didn't. I mean, it closed green up, 0.8%, but it wasn't rallying as hard as maybe a Apple or Nvidia. So do you think that
No,
price
I'd
action would?
argue against you. Sorry, AB. I would say Tesla had a really strong rally too. The low was $216 and closed 228. That's a 12-point rally on a $200 stock. It's a 5% intraday rally. It's a
big move,
pretty
yep.
good rally. But I do agree with you on the point that we knew what was holding it down. The election blues that, Trump did not have a good night. Elon has aligned himself with Trump. I thought Tesla was going to have a really bad day. I thought when, after the election, when I was watching at 9 o'clock, the election, 2 nights ago, I thought Tesla was going to be down $10. So when I came in the next morning and see Tesla only down $1, I was like, well, that's a victory in itself. And then, we sold off with the overall market, but then we came and we actually closed green on a day like DJT, was just absolutely murdered on a day that a lot of these other Trump stocks like Rum and Fun, if you want to go those pure ones. But I think Tesla actually had a pretty decent day. And it was also a day that General Motors closed red still. I think GM did not. I think actually maybe GM did end up closing green. It's close.
No, it did. It closed down 15 cents. No, and I know Tesla rallied. I mean, everything
It was a pretty
rallied,
good rally.
But my point was just that if you look at how the S&P 500 closed, how the Qs closed, Tesla was below those indices, so it was still, underperforming the other tech names in that sector, which is interesting because a lot of times when you see, or at least in the past, when we've seen tech have rallies like that, Tesla has been one of the leaders. Yesterday
it wasn't going to shrug off the election blues completely.
And today it's down a few cents again, or about $1. Yeah,
there's some election blues here for sure. So it's a good point.
Looking so just to give some more color too, and then we can move on from yesterday. So people were talking about Jensen talking during the Nvidia thing. He was talking about basically that people were like fighting hand over fist to all get the latest Nvidia models or the latest Nvidia chips, that the demand is just so high. So anytime you have the CEO of your company, when there's been maybe some question marks about demand, saying, no, the demand has been insanely high, people are basically scrapping with each other to see who can get these chips the fastest. And so you had that at the same time while the overall market was rallying. So I wasn't surprised to see Nvidia leading the way, but still closing up 8% is a huge move, especially for a company of that size now.
Yeah, I mean, we covered Nvidia here. I think just all over tech. I mean, it was a pretty incredible rally, and some of the technical damage that was done for some of these stocks it was undone like in 4 hours yesterday, which is rare to see too, where you've got a lot of technical damage, a lot of overhead supply, and that all goes away for certain stocks like, but again, some of these were holding up fairly well. But you look at like AMD had a pretty tough, last 3 weeks. And then boom, 2 days later, AMD's got 2/3 of the losses back, so it takes you, it's like the elevator down or the escalator down and the elevator up for some of these stocks, which, is not normal either. Usually it's the other way. So pretty incredible trading action.
All right. Some other stocks that are moving this morning. We covered Signet, which was in the green. Let's go to Moderna, which is definitely not in the green, trading down about $9, 11% this morning after the company is cutting its R&D expenses by $1.1 billion in 2027. The guidance revenue was adjusted lower by a significant margin. The consensus for 2025 revenue was $3.74 billion. Moderna's coming out and saying now it could be anywhere in a range of $2.5 to $3.5 billion. So well below those estimates. And yeah, I mean, Moderna just kind of a, not doing well right now.
They're trying to get away from just being the COVID shot company here, and it's just a slow, they're trying other things, obviously. They've got the flu combination, the flu shot, the cancer vaccine, or whatever they're working on. What was the other vaccine? It was a cancer vaccine or something?
They have an
HIV vaccine. They're trying a lot of things there, but nothing's sticking. And the problem is their cash cow was a COVID shot, and people just aren't getting them like they were before. So it's just a repricing of the entire company, and the company is now losing money because of that. So it all just becomes a lot more difficult for Moderna here. I don't know. They need to get another drug to turn this around. They need to get away from the COVID shot. And I don't know if a flu shot's going to turn it around either. So some of the other stuff, maybe it's the HIV vaccine or whatever else they're working on, monkeypox, whatever they're working on over there, they need to get something else to market, because when you're just relying just on the COVID shot, you're in trouble. Like Pfizer has a lot of other drugs. So, the reason Pfizer stopped going down is they took the COVID bubble out of it. And now it's like back to, its normal company that isn't reliant as much on the COVID shots. So, completely different situation there, where Moderna's burning cash now and obviously trying to work on something else because they know they can't rely on the COVID shot anymore.
Well, if you were waiting to get this back at September lows, well, you're 50 cents below it here. You had a trio of lows at the 71.50 area. Pre-market low is just below that at 70.54, 70.53. I mean, being down $8 to $10. I mean, I'm not selling this stock, and I'm definitely not shorting it at these levels. This could be, and I might be being a little premature on this. We'll see what the rest of the pre-market action has. This could be one of those days where, wow, I could have bought this under 71 in the pre-market. And then like the low of the day is like 72.5 or 73 or something like that. But let's see. We'll see if we can hold the pre-market low. That's a 70.50 area if you want to get it on the cheap. And then the monthlies are not giving you much. The next monthly low in this stock comes in at 62.55. That's a long ways below. Let's keep an eye, though. Whatever the pre-market low is before, boom, at 9:29 and 29 seconds, jot that down and see if buyers appear at that level.
BKTX continues here too. More commentary this morning. And I'm so ticked off because, again, like I said, I had it on my sheet to buy it. And then JP Morgan upgrades it yesterday. And now the analyst pile on starts. And you get Morgan Stanley that comes out here this morning with commentary here, reiterating their outperform rating, $105 price target, saying this, just basically looking at their data. There was other comments too. I just don't feel like going through the whole damn note here. One other thing I wanted to say, favorable early tolerability sets the stage for higher dose. I mean, they're just, pumping the tires. They were already bullish, Morgan Stanley. It's Michael Altz, the analyst over there at Morgan Stanley, that has the overweight on it, but just came out with more commentary and it's $105 price target. So sees the JP Morgan note yesterday and say, hey, remember, I've already been bullish this. I want to reiterate my comments because I'm right about this.
No, that's true.
And the pile on comes. So now you get it up another 2%. And this is why we get V bottoms sometimes too. We talked about the show. And a V bottom is just simply stocks going straight down and then stocks going straight up. And it used to never see them that often. You see them all the time anymore. And a lot of times caused by analysts. So here's VKTX. Could potentially on the daily do another V bottom too. And you can thank analysts for this completely on the V bottom, not driven by markets at all. Just JP Morgan note yesterday, Morgan Stanley piles on, probably another analyst tomorrow comes and piles on, and boom, boom, it's back at 66 and has all the losses back.
And then someone looks at it over the weekend and they come in on Monday and they upgrade. No, I'm just being a little.
That's kind of what they do.
Yeah,
they all just chase each other, and that's a lot of times these V bottoms that we see, I said, are caused just by market opinion. And media talking, oh, did you see this movie? And the media's talking about it. And then everybody else piles in and it continues to go up because of that. A lot of it driven just by media or analysts.
Well, you know what's the most recent example of that? See if you can think about it. They pumped this thing, and I'm not even going way far back. It happened this year. There was one stock, and the analysts started just getting on it, and it started going. And let me see if I can pull it up here in my Benzinga Pro. Come on. You guys know who it is? Let's see if the chat can get it. There you go. Right. Well, the stock was mentioned, but that's not for the reason. Remember First Solar? Remember this run that this had right here from May to June? Do you remember that?
And top right chart. Yeah, it was a crazy move.
Yeah. Okay. So let me bring this up.
Isn't that funny? Just the technicals. Like it runs up from 200 to 300, just in a crazy move. Then it takes 2 months and sells off. Where does it sell? Fills it all back up right to 200. Makes another double bottom 200. And now we're off to the races again. Obviously, CPI driven that yesterday.
Look at and that was in let me go back to the chart here. That was in May and June, right? So look at this. Look what you have in May here. Reiterates buy, raises price target. Overweight, buy, raises price target. Buy, raises price target. Outperform, raises price target. Look how many days in a row that happened during that. That was and not small firms. Roth, Morgan Stanley, Goldman Sachs, BMO, Baird, Deutsche Bank, they have to get in on it. Baird got a little cooled their jets a little bit. But I think, and then going back farther in that, McDonald's had an historic run. This is back probably when a lot of you guys were still in college, but McDonald's had a similar kind of run. But we'll see with VKTX, long tangent there by me. Thank you very much. Learn well from Dennis. There's
Pick it on me.
there's room. Wow. I don't see anything to a trio of highs in the 64 handle, 64.50. So if that's what your target was, that's what you're looking for. 3 highs in the same area, going back end of August, early September.
Just real quick, speaking of McDonald's, there was a headline this morning that McDonald's will extend its $5 meal deal through December. So, Dennis, I thought about you when I saw that
Going to
headline
McDonald's.
that you won. You won the war
I
against
did.
McDonald's. That
I was in a full war because I was going there. I was like, "There's nothing cheap to buy here anymore." Now I got the It's $5.75 in Canada. They accounted for the U.S. Canadian exchange rate, but it's $5.75 for
it's a good deal. You get like a burger,
McDouble, small fry, and a pop for $5.75.
and
then
nuggets,
when you do
and
that
4 chicken
through the
nuggets.
summer, you can buy a $1 ice cream cone. They allow
So
you
what
to
do you
buy
get?
a value meal.
What do you get if you have the app?
Well, the app is good for like other deals. That one, I don't think you need the app for. That's just a deal they're running. But
That's
app,
a good deal.
yeah, that's a good deal. You don't need the
Okay,
app for that
because
one.
I have a confession to make.
You went to McDonald's
I went to McDonald's this morning.
this morning.
Yeah.
I mean, McDonald's breakfast, great. Well, did you get some coffee? Was the coffee good?
No. Nope. I couldn't sleep, so I was in the pool at 5:25.
Wow.
Yeah. And
Look at you, Joe.
I got 2,000 in, and I'm like, man, I'm hungry, and
Straight to McDonald's.
I haven't had an egg McMuffin in about 3 years.
Pretty
And
good.
so I went and I pulled up, and they're like, do you want to order through the app? And I'm like, no. I don't have the app. So anyways, I got it, and it wasn't too much. It was like $4 or $5 or $5.50 or something like that. So the price wasn't too bad. So
But
that's
just for one McMuffin, that's it.
yeah. I
It's
just
That
not
probably
wanted-
used to be
cheap.
that used to be the
Years
price
ago, it was $1.99. You
for
know,
the
like
meal.
it's
It was,
like,
or you could have bought
not
the
cheap.
breakfast meal with the hash browns and the
But
coffee.
they were great, man. They were great. I mean, I pulled. Well, there weren't a ton of people there at 6:35, but I pulled up, I ordered, boom, went up to the window, boom, I was in and out of there. So, if I would have seen this before, I would have upgraded the stock. But there it is.
Are you now in the mood, Joel, to go out and buy some value stocks?
Not now. Now I wish I'd look at the McDonald's now, and holy mackerel, yeah,
Because
maybe
you got the Buffett breakfast already going. So now I didn't know if that was going to translate into some Buffett, trading strategies today.
whatever Dennis tells me to buy.
I'm
is
going
what
Yeah,
I
whatever
wide
that is.
right now.
All right,
You
wait,
guys-
one minute.
They're
One
letting me
minute.
know. Jude, thank you. Yes.
Oh, I forgot about this.
One
Oh my
minute.
gosh.
We've got PPI coming out. We also have initial jobless claims, which typically isn't the biggest deal for the market, but in today's market,
Who knows?
the initial jobless claims could be just as big, if not bigger, than the producer price index. But the PPI is expected to come in at 0.2%. Core PPI is expected to come in at 0.2%. So this is looking at what prices, the price growth that companies are paying for input costs. So it's viewed as a little bit more forward, leading than the CPI, which is very much a lagging indicator because it's the price that consumers pay once all these costs are then passed down from the companies. The PPI is what the actual companies are paying for.
Boom. You got a little knee-jerk reaction down. Pop made a new high at 81.50 though. But back made a new high. Very limited resistance in here. I just want to tell you that if you guys are short or shorting, boom, I have no daily numbers that are any good. Don't like the initial pop was 81.50. You probably ran some stops here. We're settling down a little bit. Not a huge reaction. Pop up, pop down. But let me see. Do I have my 1 minute bar here? My 1 minute bar, my litmus test here, our 8:30 bracket ended at 55.75. So I'm going to throw out that 81.50 high, and I'm going to say the onus is on the Bulls here to get this thing over 55.75 and then take a shot at 5,600. If not, I'd be a little cautious here. Could you give us those details again?
Yeah, so the PPI ended up coming in at 0.2%, which that was month over month in August. That's what I had at the expectation. Pro was saying the estimate was 0.1%. So a little hot there potentially. PPI year over year for August came in at 1.7% versus 1.8% estimated, 2.1% prior. So that dropped 0.4% month over month for the year over year PPI. Jobless claims came in at 230,000 versus 227 estimated. So that came in slightly more. It was 228 prior. So jobless claims actually ticked higher month over month, but very slightly. PPI month over month for August came in at, I'm getting a revised. Let's see.
Yeah, always got to revise here. You know what? I'm just going to harken back
It's
to
like a nothing burger. I'm already back. We sold
you
off.
know it. You know it's not a big
smidgen. PPI X food plus 0.3% versus plus 0.2%. So slightly higher if you knock out the food. It's in line. It's pretty much in line. I don't think this is going to derail the rally. I don't think this is a number to reverse us from everything. And I know we sold off, about 4 or 5 handles here since, the number reported, but I don't feel like this is like a deal breaker for yesterday's rally.
No, certainly not. And we know it's not a big, we know it's not a big market mover when Dennis leaves to go wide and is back less than 2 minutes later. So
yeah.
I just want to just harken back to something Blue said yesterday, and it's like the year over year comparisons, are not that difficult now, right? That looks pretty good year over year, but then you start having the year over year drop off, and it's going to get a little bit tougher to do the comparisons. But right now, since that number was released, even though we made a new high, very, very controlled selling out here. S&P still up 8 handles on the session. I see Jim lurking in the background there. If he gives us a wave, we can bring him on perhaps a few minutes early.
Yeah, let's do it.
Okay, let's roll that intro and we'll bring him on. All right, Jim Tassoni, CEO of Armor Wealth Strategies, joining us again here on Pre-Market Prep. Before we get to the PPI number, Jim, I got to ask you something.
All right.
Did you stick to your plan in Moderna?
I did. That's been one of the more favorable trades, and I will talk about a few of my trades this morning, and I'm going to do something that a lot of people don't do, and I'm actually going to admit that I was wrong on a couple trades.
Whoa.
Stop the show. The
show. We've never had somebody on before that was wrong. We better get rid of them.
I'm done. This will be my
This is it. This is your last show now. You can't be wrong.
And Joel, I noticed the shirt too, and I swear Joel and I did not plan this, but both supporting. Is that? Yeah, both supporting. Yes, both supporting our Tigers. 3 games.
Did they win yesterday?
Wild card. They did win yesterday. 3 games out of the final wild card spot. If they somehow pull this off, and we won't spend a lot of time on this, but AJ Hinch deserves manager of the century. Not just year, but century.
All right. I did sit next to him for an entire plane ride and didn't recognize it until I got home. So maybe that's why they're doing okay, because I didn't give them any advice. But tell us what you're wrong about. Tell us what you're right about, Jim.
Sure. So I will go ahead and share the screen here. All righty.
What about the Moderna trade? Like, is that what you're getting into as a Moderna trade? Because I want to hear that too. I didn't hear the Moderna trade.
Yeah, it wasn't on my prepared remarks, but I think it
Tell us
was.
about the Moderna trade.
Yeah, so it was 3 weeks ago, maybe. I think I was on, and I highlighted a short opportunity in Moderna. And obviously, we see what's gone on with the stock since. I think at the time we were trading somewhere right around $90. I don't have the exact trade up, but it's been a very, very good trade. I would continue to look towards pressing that short. I see no reason why overall Moderna's a stock that you want to own at this point. I think
Are you still short it right now?
I am still short it. Now, I brought my stop down. Obviously, I've locked in profits. I've taken some of the position off, but I am still, full disclosure, short Moderna at this point.
Don't short more today. Wait for a pop.
I will not.
Short in the hole.
That's not investment advice. Now, see, if Dennis was trading, I'd say, Dennis, offer 5,070 right now and see if you get lifted.
You left me right away, then I'm in trouble.
That's a joke. All right, Jim, go ahead. Sorry to interrupt you.
No, you guys are good. So I wanted to start off with a few thoughts, and you guys hit on it. And Dennis, when you were talking yesterday and you mentioned, buying into tech, I couldn't agree more. And, in the last several shows that I've been on, of the three we talk about the three major indexes, SPY, the Qs, and the IWM. And that I've talked about definitely being more favorable on the buy side to the Qs and more favorable to stay away from or even look for short opportunities in the IWM. And I think that's really playing out. One thing I wanted to point out was the crazy concentration in the market yesterday. And you see it here on my screen. You can see SPY was up a little over 1% yesterday, where the equal weighted S&P index was essentially flat, up 5 basis points. So that just shows you that there had to be an unbelievable amount of concentration in those mega cap, FANG, Mag 7 type names in order to drive that dispersion. The other crazy thing was that the SMH was up 6% from that 1030 reversal through the close.
Holy.
I mean, that is just, again, that is nuts when you talk about an intraday trading opportunity like that in an ETF. And I realize it's a concentrated ETF, but still, it's not some small cap stock that had that reversal.
Crazy.
Now, we talked about, the PPI, the CPI, and some of the rate hike expectations. And one of the things that I wanted to point out is the market is pricing in almost 100% certainty of 100 basis point rate cut through the end of this year and 250 basis points in cuts over the next 12 months. I know, Joel, you've talked about this a little bit, but I don't know. That feels a little bit heavy to me. Maybe we see it, maybe we don't, but I don't know why, with the market near all-time highs, with the economy seeming to be on relatively stable footing, why we need 2.5 or 250 or 2.5% worth of rate cuts over the next 12 months. I get it, the market's pricing it in, but at the start of this year, the market was also pricing in 8, 9, 10 cuts, whatever it was, and we ended up getting a lot fewer than that. So I would just stay tuned on that. Right now, that's what we're pricing in, but I'm not necessarily in the camp that that's going to happen. I presented this slide, I think it was last week, with regards to September, and it's sort of playing out to this point where we would expect. So the first half of the month has been relatively decent. We had that little blip at the beginning of the month, but we seem to be buying all the dips. I would just point out that while September is historically the worst month for the stock market, I think what you really need to pay attention to is a lot of that negative performance comes in the back half of the month. Past performance, not indicative of future results and no guarantees, but it's definitely something to pay attention to. Getting back now to those rate cuts, I found this slide from Charlie Biello, who's a great follow on Twitter.
Yeah.
He put this together. I thought this was really interesting because a lot of people were saying, oh, we're going to get 50. And I know with some of the latest news, we're at about an 85% probability of 25 and only 15 of 50. But that looks to be actually a good thing. And he put these stats together, and I found this really interesting. The first Fed rate cut after a hiking cycle, when we've gone 25 and when we've gone 50, and the S&P forward returns going out 1 year, 2 years, 3 years, 4 years beyond that. And you can see that the couple times that we had our first cut be 50 basis points was 01 and 07. And we see the subsequent returns over the next couple of years, and they were not favorable. So we actually probably should be hoping and look to be getting that 25 basis point cut, because that's actually much more favorable for the market going forward.
And this is such a good point because the 50s are normally used for when the economy is really in a lot of trouble. 2001, the tech bubble burst. 2007, the financial crisis. They usually only use 50s when we're in a whole lot of trouble. So we're markets are near all-time highs. Why the hell do we need a 50?
And to that point, Dennis, that's what I was saying on that previous slide. What is the market going to be telling us for us to need 250 basis points worth of cuts in the next 12 months? To me, that signals a market and an economy that's not on strong footing. And so if we see that level of cutting over the next 12 months, I feel that signals a weakening economy and not something we want to see for the stock market over the next 18 to 24 months. But with that being said, now I will move on to the part of a follow-up on some of my trades. And I want to kind of use this, and I'll move quickly through this, but I want to use this as a bit of a teaching lesson. And last week I came on and said that I thought we might have an opportunity to buy Wells Fargo here. Well, that was wrong. Buying it at 57.78, stop at 54.73. Definitely blew through my stop. But I took my loss and I got out of the position.
And that's what you got to do. Have your setups. And you know what? I just want to stop you there too, because it's such a good teaching tool there, Jim. I mean, when you've got those stops, people will be like, well, yeah, but I think it's going to come back. I think it's turning around. So let's just take it down a little bit more. And they take it down a little bit more. And this is when investors get themselves into a whole lot of trouble. And traders especially, just by adjusting it down, because I don't really feel like taking this loss and I can see the momentum. So I'm just going to change my original thesis here and bring it in a little bit. And then all of a sudden it's death by 1,000 cuts and you're down 20% in something. And you're like, what the hell happened? So applaud, I just want to give you, kudos for actually willing to admit you're wrong and take your loss.
Yeah, and that's exactly it. That's the lesson here, and you're 100% right, Dennis. And then, again, with my recommendation on ConocoPhillips, buying
and
it
again, we don't give recommendations, but with your idea.
Idea. Thank you. My compliance department would actually appreciate you correcting.
Yeah, I got your back.
Thank you, Dennis. But my idea of buying ConocoPhillips at 109.52, again, wrong, but took my loss at 108.25. And then I wanted to bring up and highlight a third idea that's actually been working. And this was an idea I came on and said an idea to buy the Qs at 455.68 for a target of 481.27. Now, right now, that trade is working out really well with the Qs right around 468 to 470 as we speak. If we get to that 481 target, I've more than made up for the losses on those two stocks just with this one trade. So I gave 3 trade ideas. I was 33%, 1 out of 3 on them, but I'm going to end up being profitable over those 3 trades.
That's
and
nice.
I think that's the really important lesson here, is to understand that if you take your losses, if you have good risk reward setups, none of us bat 1,000. I know everybody on Twitter pretends they do, but none of us real traders and investors bat 1,000. But I can bat 33% here and still end up on the good side. So I'll run through a few quick ideas. First off, I wanted to point out, this is kind of my top-down recommendation or how I look at markets. First, I look at sectors, see where the strong and where the weak are. Because as you, Dennis and Joel talk about all the time, when you're trading, whether it's swing or day, when you're looking on a shorter term time frame, it's always better to buy strong stocks in strong sectors and avoid weak stocks in weak sectors. So here's kind of my setup right now. I'm really neutral overall on the markets. I've got that long QQQ, but I would not be initiating a new trade here. The only sector that seems really strong to me and that's been breaking out is real estate. And I've got a few sells in here, but overall, I'm basically neutral on the market. So, and I'll blow this up a little bit so we can see it a little bit. Ooh, that's too much. So we can see it a little bit more here. I think one of the trades I really like in this market, again, looking at the real estate sector, strong market, is Prologis. This stock has an industry-leading hold on the warehouse industrial space, has really benefited from the e-commerce boom, which I don't think is going away anytime soon. They have unrivaled scale in this market. And you can see between this kind of 123 and 130 area, we've had a huge consolidation that we're starting to perk up above. So I love the idea of buying this stock in the 128 to 130 area for a definite move higher. On the flip side, one sector that I don't love is the materials sector. And so I identified what I think is setting up to be a weak stock in a weak sector, and this is air products and chemicals. This stock is in a distant third in the industrial gas space. I don't see them being able to make up the market share that they've lost to their larger competitors. You can, again, see a huge consolidation here, and that band's actually narrowing. If we get a break below that 269 area, I would look to take a short here. You have, again, your defined risk setup. I love this setup.
It's not as well defined on your chart, but on my daily, there's an absolute wall at 280 here.
Yeah.
Oh my God.
Yeah.
Oh my
I see the
gosh. That's
280
where the big boys are hanging out. But anyways, I just wanted to, that just popped out to me. Go ahead, Jim.
No, I appreciate that. So my final comment that I'll leave, and I'll toss it to Joel, to you and Dennis to see if you know, the final chart I'm going to put up is something that hasn't occurred since this time in 2019. And I'm going to ask any of you on this show, anybody in the chat, if they can identify the chart and the anomaly that has not occurred since 2019. Anybody?
Probably not.
No idea. Here it is. For the first time last weekend since 2019, we had Michigan State football and the Lions win while Michigan failed to do so. First time in 5 years. I'm sorry, Joel, but I felt as a diehard bleed green and white Spartan, I just had to point that out. For a lot of years of roughness for us.
So it was a good weekend for you, in other words.
Yes. And Notre Dame got upset by Northern Illinois. Sorry to Notre Dame fans out there.
You may not get back on the show for this slide.
Okay. First of all, Jim.
He's slouched now, and he's not pleased.
Jim, what did I tell you about the Michigan game when you made that tongue-in-cheek joke about?
You really did. You saved people's retirement live on this show by telling them not to invest their retirement savings in that bet.
And I told them to take Texas too.
You did.
And I said if Michigan did not get 2 sacks, they were going to get killed. They had 0 sacks. Okay. I'm not making any predictions for the next 2 weeks, but I will tell you the only way we're going to have a decent season is if Jack Tuttle gets healthy. He's a 7th-year college player. We need somewhere.
I got him going.
him
going.
You got him wound up now. Now you did it. You're going to leave.
Jim, we'll have you back on in January. We'll have you back on in January.
All right, guys. Take care. Thanks for the time.
Thanks, Jim.
All right.
Thanks for the
See you, Jim.
presentation. And thanks for the honesty, too. I love it when people call out their losers. People should do that more often.
No
All
problem.
right, guys. Jim Tassoni
No
again
problem.
from
You guys have a
Armor
good
Wealth.
one.
Jim, yep, have a good day. All right, guys,
I
we
saw
got
it loaded up because I had his but maybe you guys saw it on the screen too, because I saw the state, and then I saw the line, and then I saw the X over in Michigan, but we go back and forth on that. But no more sports. Let's get back to the markets. Have we talked Micron yet?
no. So
And
Micron,
the
go ahead,
analysts
Dennis.
beating it up here this morning. So multiple analysts commentary on Micron. I guess BNP Paribas was waiting for a rip to sell, and that is what they have done here. So Micron ripped yesterday. Yes, I still have Micron in the long-term portfolio. I bought it right around here on the August low. Took it up 20%, took it all the way back down. Isn't investing fun? And Micron, we got Carl Ackerman from BNP Paribas downgrading the stock to underperform, which is sell from neutral. So they are selling the rip on Micron, and that is why the stock's trading down this morning.
You also have Raymond James maintain outperform on Micron, but lowers the price target to $125 a share. So Raymond James previously had a price target of 160 down to 125. That's a pretty significant price target change there. So as strong as the chips were yesterday, we'll see if these downgrades, come in and hit those today. But if you look across the board, I mean, NVIDIA's still in the green. You go to AV Go. AV Go is slightly in the red. I mean, wow. So
Chips are not having that great of a morning, to be honest.
Oh, no, sorry. NVIDIA is slightly red. I was looking at the pre-market up.
NVIDIA's slightly green.
What am I looking at? Broadcom. Did Broadcom not close? No, Broadcom closed green yesterday. I'm looking at Google right now, which is giving me some weird prints.
Google's way up.
This Micron, and before you move on from it, I mean,
Yeah.
couldn't you told me this at 110? I mean, you're
couldn't
telling
have you told me it at 110, because then maybe I would have sold it.
No.
It even crossed my mind. I talked to you like it was 10 days. I was like, I'm up 20% in this 10 days. Well, what's the saying? Pigs get slaughtered or whatever. So I guess the Kramer's saying I should have taken the gain and ran away. When your stock goes up 20% in 9 days, you sell it. Because if you don't, then you don't keep the gain, it looks like. So Micron back down here. I will say, if you want to do Jim Tassoni style here, you could set up a trade here right now to buy Micron. And you're stopping yourself out at a very, very clear stop out point. If you look back to the August low, 84.91, the recent September low here that we just had 2 days ago, 84.87, within 4 cents of each other.
Yeah.
Support is ridiculously well defined. If it takes that out, starts trading 84, you got it wrong and run away. So I would say the trade would be buy at 87.80 right now. This is just a trade setup, not recommendations, just an idea. Stop yourself out, give it a buck through it, $84. So you're risking yourself about $3.80. I like the 2-to-1. So I would say you're probably selling up at $95, on the return side. So that's how I would set that up with Micron, thinking that maybe they'll come in and buy the dip today just because there's a lot of money managers that missed yesterday. And they might say, ooh, I can pick up Micron on a discount because we got an analyst opinion there. So that's my thought process there. Spinner's saying it's not cheap. Micron is a cyclical stock, so it's very difficult to predict earnings. They will make a lot of money, then they will lose, and they will make a lot of money, and then they will lose. It's a cyclical stock. So you're not going to just see the steady climb of earnings that we get with Apples or Amazons. Micron's wild on earnings. Some of the analyst predictions for 2025 are $11 a share. But then it all goes cyclical. And if the DRAM pricing comes down, that could all change. So you got to stomach it. But this is just, an idea, not saying a long-term investment idea for a trade, not looking at fundamentals, just saying, hey, I got good support down at 85. I'm $2 away from it. Maybe I lean on it. Maybe it gets stopped out. But it's not, definitely not showing you a lot of relative strength here today.
Yeah, and I'm just looking at it from, man, if I had shorted this puppy anywhere over 100 and it's coming back down to this area, I know it hasn't hit in the pre-market, I'd be like, wow, am I ever got the downgrade here after the update yesterday? I'd be licking my chops and saying, hey, I'd be looking at the 85 to 87 area. In fact, you are still $2 above yesterday's low, or $1.50. If they want to hurt this thing, then they're gonna take it through yesterday's low at 86.08. I don't know who this analyst is. I don't know what they're doing, and I know yesterday was a little bit of an anomaly with the way that the way we moved off the low. But in that perspective, it's holding up okay there on Micron.
Sticking with the analyst ratings, we do have a beaten up stock that's getting some life the past couple days on some positive ratings. That is Roku, one of the Kathy Wood stocks. Closed up nearly 7% yesterday, up another 5.5% this morning. Wolf Research upgraded the stock from peer perform to outperform and announced a $93 price target on Roku. If you've been a bag holder in Roku these past 2 days, I mean, this is what you've been looking for. I know what I would do if I were in that position, but Roku finally getting some life here.
You don't have to agree with the analysts. You don't have to say that they all make good calls or bad calls. You don't have to, but you've got to give them respect that they move price. And, if you're on here and saying, well, the charts look pretty good, Roku was going to go up 5% this morning anyways. No, it wasn't. It's going up because it got an upgrade. And upgrades and downgrades move price significantly. So whether you like them or not, analysts move price. You have to respect that. I've never liked Roku for a long time, pretty much ever. It's having its day, we're turning around a little bit. Nothing goes straight down here. I still don't think this is a great long-term holding.
And here are my technical comments. Can you see it's trading at 74 right now. There are my technical comments on Roku.
A lot of question marks.
Yeah, well, look where it's going into, Dennis. Look at back
going
in
into
February.
A nothing area, gapping into a gap.
Yeah.
And we say what goes up, what goes into a gap, can quickly, if it comes down through an area quickly, can go back up through an area quickly. So that's a consideration here. You're getting into an area where there's not much in there. So hard to just say I'm going to short this, blindly here at 74. We could have said that an hour ago when it was 73. So it's tough. There's just not much in here. Sometimes just pass. Take a pass.
Pass.
All right, looking at some other stocks. Did you guys? I saw another headline this morning on Boeing on CNBC. I didn't click into it or look at it, but it said like Boeing faces another strike now. So
yeah, I thought the strike was settled.
I know. I was like, wait a second. That was the whole. Positive
they're striking again now. They're striking for next time because they got some money, and now they're striking because they want more money than the contract they signed yesterday. No, I don't know. It's probably different, group.
No. So it says, the headline we have in Pro says Boeing aircraft production faces potential disruption as 33,000 workers vote on strike. Boeing could face strike as workers push back on tentative contracts. So it sounds like that they announced that on Monday. They're going to avoid the strike.
Yeah, why could
they high? And then now they're like, actually, we not so good now for Boeing. The strike might be back on.
Not only does Boeing give you news all the time, they reverse the news they gave you before.
Yeah.
Right?
Well, I think they did settle with was it the pilots that were striking before, and now you got like the people who are actually building the planes striking.
I have no idea.
Is that what it is?
I don't
know the details of it. All I know is strike is back on the table now, potentially.
All you know is if it's Boeing, it's 90% going to be a bad headline. You get the odd 10% where it's a good headline, but this stock is I've never seen a stock get this many bad headlines. It's like 3 times a week. There's a headline knocking Boeing down, and then the other time there's maybe one bringing it up a little bit, and then one day a week it has no news. It's like news every day, and it's usually bad. Tough stock to own.
All right, real quick, last stock of the day we'll touch on is Kroger, which is where I go for my groceries. My groceries up here in Michigan.
I always like Kroger.
What Kroger do you go to?
I had never been to a Kroger. Well, when I lived in Royal Oak, I went to the one there. It was off 12 Mile, but I used a pharmacy there, so I still get up there sometimes.
Okay.
Kroger reported EPS of 93 cents, beat the 91 cent estimate. Sales came in at $33.9 billion, missed the $34 million estimate. Outlook for EPS came in line with estimates. Sees identical sales up 0.75% to 1.75%. Full year guidance reaffirmed. All in all, it seemed like kind of just a decent report. Not great, not terrible. And the stock is trading higher by 65 cents.
I don't know what to say about this stock. I mean, it's a consumer staple. It doesn't move around a lot. They obviously had the failed merger with Albertsons, and ACI is just a disaster here. But the PE on Kroger has never been really that high either. Let's go look. Do the technicals, Joe. I'm bringing up the fundies.
Yeah, I'll give you the technicals, and then I have a fundamental comment to make on Kroger. From the technicals, keep an eye out. This thing better get over 52.50. Your 2 and 3 day highs, 52.53 and 52.58. So that tells me there's a big boy at 52.50. Fundamentally, I am downgrading Kroger to a hold or a sell. I have mentioned on the show how I always use their Granny's coleslaw for my Georgia Rubens that I make. Well, they switched to Kowalski coleslaw.
No.
And it's way too mayonnaise. So I am no longer. It's like,
choking on it.
It's just not good on my sandwich. So downgrading Kroger's coleslaw to not buying it anymore. And I don't even know where I'm going to find good coleslaw now for my
Joel. Who do we got coming on the show with us tomorrow?
Tommy Lackey Jr.
Oh yeah,
nice Tommy. He did tweet that out too, so I knew that.
Joel, I watched a movie last night, and I'm not gonna say you have a doppelganger because it wasn't like identical, but this guy, I was like, that guy kind of looks like Joel.
Was it Robert Redford?
No, it was. it was actually Brad.
Oh, yeah,
it was Brad Pitt and Thelma and Louise.
Yeah, he's a good look. Yeah, I just could go with Brad.
No, it was the dad in Beetlejuice.
This could go either way for you, AB.
I think I know. He's a movie star. He's a movie star. How that can't be a
all movie stars are good looking.
Hey, AB hasn't got fired in weeks, so he's.
Wait, hold on.
If he comes in at 7:50 tomorrow, he will. But so
he's good to go. He's been coming in early.
Yeah,
hey, hold on. Okay, wait, I got it. Hold on. It's this guy. Let me share my screen real quick.
Let's see.
I said it's not a doppelganger. I said I saw like some resemblance.
Show it.
I was like, yeah, this
Oh, I can't wait to see this.
This picture right here, the guy on the right.
Okay, you're fired.
Fired?
No, that's
he was in a Ferris Bueller's Day Off.
Yes,
Ferris Bueller's Day Off principal.
He's in Ferris Bueller's
pretty
Day Off.
good looking guy.
Yeah, he's a movie star. Come on.
He's not a movie. Yeah, okay.
I don't know if I see. Do you see the resemblance? Is there
we should end this show at 9:00.
Someone in the chat, help me out.
I don't know. I don't know.
Like a 50% resemblance.
Yeah. Downgrading AB. Okay.
All right, we need a face. Nailed it.
9 times. 9 times.
Okay, well, apparently this guy got in trouble, so now we're gonna. All right, we'll end the show.
Joel's
All right,
fired.
guys, we'll see you guys. We'll see you guys tomorrow morning, 8 a.m. Tommy Lackey. Do not miss it. We do have live trading starting up right after this.